Which markets do you think are tightest and which are loosest? In other words, where do you think prices should hold up relatively better than others?
Oil, and more oil. The situation with oil, you're in peak travel season. And by the way, the word here in the UK is, people are they're going to get in those planes and fly. They haven't taken a vacation for a very long time. So in terms of looking at, the demand above supply, the deficit, the one in oil is very large. In this OPEC meeting today, it modestly improves the situation, but in no way does it solve the deficit. We estimate the deficit in June was 2.3 million barrels per day. They've committed to adding 400,000 barrels per day in the month of August, which, as you can see, doesn't even come close to filling the gap. But given the inability for 20% of OPEC to even hit their quotas, that number is going to be something like 300,000 barrels per day. So 2.3 million barrel per day gap, they're going to fill maybe 300,000 of it. So we really like oil. Oil's the one here, given this pullback, has the greatest upside. Our target is still $80 a barrel. We think with this OPEC meeting being more bullish than we expected, that number is now somewhere around 82, 83. And we still think you can see spikes into that 85, 90 range. But I want to emphasize, we got to get through the next several weeks and be sure that we don't see significant lockdowns.
So I guess 2 points to make here to make sure I'm understanding you correctly is that oil is actually the commodity you think is best positioned because the market is that undersupplied that in any kind of demand erosion situation, its fundamentals still hold up the best. And yet it's the worst performing today. So that's one observation. And then the other is from what you're describing, while we all know markets and they can, sort of take these things and run with them, you basically would buy oil and would you buy all of the other commodities here as well that you've been recommending on today's price action?
Actually, if you want to hedge yourself, from a potential of a lockdown, we like to call metals like copper and the other bulk commodities. We call them CapEx commodities, meaning they're used towards investment. Think about oil as OPEX commodities. You operate the economy with oil, you invest in the economy with copper. If we do have lockdowns, it's going to hit the OPEX commodities much more than it will the cap. In fact, there's very little risk that the CapEx commodities like copper get hit. So we would view this broad liquidation as really being a buying opportunity across the commodity complex. And with copper, we still stick with our $11,000 a ton target. The reason we like oil right now is just how far it's sold off, and given how large the deficit is and the risk that this leads to real substantial lockdowns being pretty, I would say, still pretty small.
Yeah, well, I am very interested to see if this is the end of the trade that's kind of been coming to the forefront for the past month or two, or if it's the beginning of a kind of a more accelerated version of it. But Jeff, again, for explaining the fundamentals here and how these things trade, we greatly appreciate it.
Thank you for having me.
Jeff Curry of Goldman Sachs.
Shepard Smith here. Thanks for watching CNBC on YouTube.